Hi, Tim Bigham for Delta Derivatives, Option Hedges and Edges, powered by rbtrader.com, the best option scanning tools out there, and taking a look at a market that certainly has come off the deck post-Greece or pre-Greece, however you want to look at it, but certainly, Greece is the word here going forward. We'll see what the weekend brings. We're also obviously having Puerto Rico jump into the fray with some onerous debt. And I think most importantly, China, the intraday volatility on China is mind-boggling. We're seeing, 8 to 10% moves commonly in that market. So I think at the end of the day, China will tell the ultimate story. So we saw the VIX race from, the 12 level last week, traded up towards almost 20, this week intraday, pulling back a little bit today. So I think we're finally seeing some option selling strategies make some sense here. So I'm positioning selling out of the money call spreads as kind of a trade structure. I can't envision, a huge rally from these levels. We've had a nice move back up, to say the least, but targeting that kind of, 211 level on the SPY, selling those, buying the 213s as a hedge, and also for a margin kind of protector. So I just think we'll be range bound until further notice, looking really at, 210 to the upside, 207 to the downside to use the SPY. We briefly pierced through that support level, but have come back inside it. So I'm still guardedly bearish here, given the fact that, well, the first earnings kind of, recession in a while, and certainly a revenue recession. Revenues for the year will be negative for the first time, in 5 years. So given the fact that the multiples can only expand so far, and we're looking really on a non-GAAP basis at almost 21 multiple here, stocks are not getting cheap by any stretch of the imagination. And given the limited pullback really we had, given what happened, I think we'll have a big struggle going forward. So using that big jump in implied vol to sell out of the money call spreads on the SPY. Also, as always, using those arbitrator option scanners to be a little more opportunistic than tactical. Looking at a name today like HIG, saw a big buying in the July 43.5 calls. So I jumped in, bought the next week's, the July 24th 43.5 calls, sold those, put on a calendar spread, paid about 8 cents, have about a 6-point vol advantage here just because of that big buying. Looking for a slightly bullish up move, follow that call flow, and more importantly for those vols to realign. Also looking at names like KING, which saw big buying at the beginning of the week. JOE saw big unusual buying as well. Doing buy rights on those, buying the stock, and selling those calls that they're buying to position again bullishly, but also capture some of that implied volatility. On JOE, looking at the July 15 that we put on KING, going out to August, the 1506s is where the volume's at. So until next week, this is Tim Bigham, and especially in this market environment, keep those position sizes in place and those stops going. Take care.